Hi, everybody, and welcome back to FANG Friday. This is Ross Healy, the chairman of Strategic Analysis Corporation and a senior portfolio manager at McNichol & Associates Asset Management. First and foremost, after a long wait and many requests, I'm happy to announce that I will be back on Market Call on BNN on Tuesday, July the 9th at noon. Mark your calendars, because this is sure to be a good one. Taken together, my three stock picks from last June blew the lights out, and I'm going to try to do the same thing again, albeit with less confidence that markets will necessarily be as favorable to making money overall as they were in the past year. However, there is always opportunities in any market, as we shall see. As you were alerted, I was on BNN last Monday giving their viewers the analysis of Nvidia that I provided you last Friday.
Ross, it's great to see you.
Nice to be on with you, John.
Okay, so the backstory on all of this that got you started on this theme, tell us about that.
Okay, first of all, I encountered this interesting book by Annie Duke called Quit. It's entitled The Power of Knowing When to Walk Away. Now, I have been positive on Nvidia actually all the way up until last week, and in which I changed my rating from a hold buy, to a sell. And that's because the stock has reached a valuation level which I do not think it can go any further, and there's a number of reasons for that.
Now, if you go to the BNN Bloomberg YouTube channel and watch that clip in full, you will see the comments below that video. My remarks on YouTube attracted a lot of comments. It won't surprise you to learn that the vast majority of them took strong, even violent exception to my conclusions that the stock ought to be sold at these levels. Now, you would think that such feedback might make me change my mind, but all it did was remind me of the audience reaction to my sell recommendation of Nortel 24 years ago. Like Nvidia today in the US market, Nortel was then Canada's largest stock by market capitalization, being a full 33% of the index then, and held in virtually every portfolio. A typical remark back then was, "Never invite that person on BNN again. I mean, look at his white hair. He doesn't understand the 21st century." As I recall, it took another month before the stock began to decline in earnest, but my timing was impeccable. I still have white hair, although a lot less of it today, and I am sure that most Nvidia investors are convinced that I don't understand the rest of the 21st century. But I do understand valuations and fundamentals, and a bubble is still a bubble. Anyway, let's take a close look at all the FANGs and what did go on in the past week. As always, before I do that, I do like to say thanks to everyone who likes this video and all our subscribers. It really helps to grow our channel, and we appreciate it greatly. And if you'd like to learn more about our valuation service, go to www.strategicanalysis.ca. Okay, well, let's start off with Nvidia, and here it is right up against its HB8 valuation. And as I think I showed you last week, and reminded you that that is the highest valuation that we actually show in all of our charts. It is the theoretical peak valuation possible. Well, it tried and it tried and it tried, but so far it has not been able to break out, and of course today it's had a nice little setback. So we shall see what transpires from here. However, as you know, I remain highly bearish on this stock. Now, there are two other $3 trillion companies in the company of in Nvidia, and the first is Apple. Now, I think that if I am correct, and if Tim Cook is being honest with us, and he is buying back shares, then the stock should have broken out over its HB6 price, which is 33 times book value. And of course, you know, they are intending to launch an iPhone with AI capabilities. So, promise of interesting things. We will certainly have to hold this one. Although, again, I would like to see what happens when I actually get the buyback information. Microsoft, well, you know, look at the growth of the fair market value. It just sort of continues to mush along, and the stock continues to be tight, or fairly tight, up against its HB2, which is 12 times book value, and not really going anywhere. I would watch for a breakout, but I think as long as it can ride the HB2, then you know, that actually implies a fair growth rate in the price of the stock. So we hang in there. Alphabet is moving up to, but not arrived at yet, its bubble price, which is 7.4 times book. Note that nice uptick in the earnings and therefore the fair market value trend, which suggests that you know, it's going to hang in there and should get up to the bubble price, which is about another 10% higher than now. Amazon just continues to ride happily above its bubble price, and as long as it does that, this is probably the lowest risk of the FANGs. So I would be very definitely hanging in there. Netflix is coming up hard against its HB2. Now, they had really nice numbers, but which was the last quarter, but the stock, instead of breaking out, broke down. Well, it's trying again, and let's see what happens here. Meta doesn't know what to do, does it? Eh? If I take a long look at Meta, to remind you again, I can see that it's banging up against its bubble price now for the past 7 years, and it's struggling now to break out. It's struggling against its own history, and I have to remind you that stocks have a memory, and memories die hard in my experience. Finally, Tesla is trading in that little channel between its bubble and its HB1 price. Tesla is very interesting because it may be the template for Nvidia. Okay, 2 or 3, well, I guess 4 years ago, the stock was double where it is today, and although the balance sheet continues to grow, the earnings outlook slowly is fading away. Of course, Tesla's principal problem is that, they may be the Cadillac of the electric vehicles, but it has attracted all sorts of competitors, and When you attract competitors, then there's price pressures, you get margin pressures, and you can see that in the stock. And I wonder if that's very much going to be the case with Nvidia as well. Now, to briefly recap, if anyone missed FANG Friday from last week and my BNN appearance on Monday, I'll point out that I based my sell recommendation on Nvidia on 6 reasons. I will reiterate that using the SVA numbers, the most likely downside risk for the shares is a decline to its fair market value, or $40. That's a decline of 69%. But in a bearish market, the probable target would be its bubble price, or minus 86%, and could be lower. An AI revolution may be coming, but there is a reasonable price for everything. I referred you to an excellent book by Annie Duke entitled Quit: The Power of Knowing When to Walk Away. She wrote another interesting book, Thinking in Bets. And I think the term betting is appropriate for what you are doing when you gamble on valuations with such poor investment fundamentals as you are today with Nvidia. As far as the rest of the FANGs are concerned, I do need to emphasize that I would keep a close eye on the remaining $2-3 trillion stocks, as they are far from cheap or even modestly overvalued. Apple does look interesting, as it may have broken out technically over its HB6 price, their 33 times book, depending on whether Tim Cook follows through with his share buyback promise, which I have not seen so far. Microsoft, Alphabet, and Netflix are trading up to strong overhead resistance, and you do need to watch them closely as well. That leaves me with Amazon, which is closer to good support than overhead resistance, and Meta, which does not appear to know what it wants to do, but is hanging in anyway. Finally, Tesla is a possible template for what may be coming for Nvidia. I still do not like the fundamentals for this stock. However, the stock has been trading in an SVA channel between its bubble and its HB1 prices at 7.4 and 9.5 times book. And any recent buyers should be monitoring closely to see which direction the stock may take. Anyway, that's all I really want to say this week. I would remind you again that I will be on BNN Market Call on July the 9th. I must also note that I am taking off the first week in July for a holiday, and there will be no FANG Friday webcast then. For now, this has been Ross Healy, the chairman of Strategic Analysis Corporation and a senior portfolio manager at McNichol & Associates Asset Management, reminding you that nothing, including investing, is difficult if you have the right tools. I will see you next Friday, but not the week